We get asked this a lot. Earnings. Do you mean EPS? And what about the impact of share buybacks on EPS?
Yeah.
Which is not an economic impact, but more financial engineering.
Oh, here's a good chart for you on that. Like if it is financial engineering. It does inflate earnings. Again, you reduce the share count, but you lever up your balance sheet to do so. All the shenanigans that that Wall Street executives do. By the way, that's the reason why the average tenure of a CEO at an S&P 500 company is just north of 4 years. They're really not in it for the long term for you, most of them. Just don't forget that's the average tenure. So that means there are plenty of them that either get fired or whatever. They just get paid and leave. That's kind of Wall Street, right? But again, if you look at slide 121, I think we have that in the current macro deck. You guys are gonna have to go dig deep. Okay, so here it is. Let's separate. Jonesy, you're gonna like this one because this is pretty new. All right, so here we have the percentage of companies with negative year-over-year earnings. Okay?
EPS.
And again, it's not just the small, little, bad triple C companies that nobody owns, because we all understand that it's different this time. We own secular growers that are big cap. These are companies with market caps greater than 10 billion. And now on the black line, we have the negative year-over-year cash flow growth. Cash flow is different than earnings. So this is where your question comes into play, right? You can manipulate the earnings growth by reducing the share count. You can't manipulate your cash flow by reducing the share count. You got that? Okay, so look at this. The latest filing, and this is before this quarter, which is going to be a bad earnings season. 30% of companies with a market cap of 10 billion or more have negative earnings growth. Negative cash flow growth, it's 22%. See that? Ooh, okay, so you're like, okay, that sounds bad. I don't really do math, but tell me more. All right, okay. Back here in 2000, this did this too. Does anybody know what happened to stocks in 2001? I heard Andrew Sauce Sorkin, or whatever his name is this morning. He's talking to the guy. He's like, well, unless we're having a recession. It's like, we actually really didn't have a recession, Andrew, to lose like 60, 70% of your money in stocks from 00 through 02. Remember that? For those of you that have been alive or read a book, for the past 30 years, the U.S. stock market has crashed 6 times, and I could actually add in some more mini crashes. So, what could possibly go wrong? But what's happening here is that earnings and cash flows are crashing. And then there's this time in 2007 when the economy peaked. Oh, and then you went from here to here. Well, then you went to here. That'll never happen again, right? No, never, 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 never. But this could happen. You could get up in here, and that looks like where it's going, Jonesy.
Yeah.
That looks like a really bad situation. Buy stocks. Just buy stocks.